Welcome back to another episode of The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you, it cannot take care of itself. Today we're going to look at Nike. Yes, the sneaker company, but it's a lot more than a sneaker company. It's a brand. It's a global brand. It's a very successful company, probably one of the most successful companies we'll ever discuss on this program. If you had the stock 10 years ago, you'd have paid about $20 a share. Today, well, here we go. It looks like Mount Everest a little bit. That says 113, but the stock, since we've come on air, has gone to 115. So it's been a great success, the story of Nike and its stock. And if you've been a shareholder, you're not going to sell it now, although you might think about selling it, selling a little bit of it. Will it go up 5 times, 6 times in the next 10 years? Possibly, but let's look at some of the figures. What is Nike? It has about 800 stores around the world. It produces not just sneakers, but just brands everything, anything pretty much related to apparel and sports. What is the apparel and sports market worth? Something like $330 billion a year. And I would say the share Nike has of that, roughly 10%. So revenues of about $30 billion a year. Hard to beat it. Of that $30 billion, they spend about $3 billion on famous athletes, Tiger Woods, some of the others, all of whom are the brand representatives for Nike. The question now for shareholders is, do you want to own the share at $115 a share? I say it's expensive. I know they've had growth. I know they've had phenomenal success. But when you look at that PE, it's 28 times, 26 times. That's stratospheric. That means that there's a big barrier for you as a shareholder to get your money back. Yes, they've grown. They grow at phenomenal rates every year. But the fact remains that it's an expensive stock, one of the most expensive stocks you're going to look at, higher than the S&P averages, higher than many other of its competitors. Not all. You could argue that it's cheap compared to some of its competitors, but they're off the charts. Under Armour's PE, for example, is 85 times. So the question is really not, is Nike a successful company? We all know it's a successful company. Look in your closet. Look at all the little swooshes on those shirts and on those pairs of sneakers that you own, and you'll think, I like this company. You may like to wear their brands. You might like to use them in your weekend sports. You may like to wear them every day of the year. The fact remains, if you own the stock, be prepared for a wait if you think it's going to be a 5 times, 6 times growth in the next 10 years. Well, that's all the time we have today on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.